realized vol bounced about 20 points on both assets. As we saw those supports give way, we had that knee-jerk lower and then that V-shaped recovery taking us back into the range after the dovish macro developments. Implied vols, though, were not quite as violent. Implied vols had been trading at a bit of a premium. You can see implied vols were here versus realized here last week. We had positive carry. We've had realized jump up to here, and implied vols have kind of flat to drifted lower. Hence, the carry has flipped negative. So you've got negative carry on both Ethereum and Bitcoin from positive carry about a week ago, and that's because realized has jumped and implied just kind of stayed where they are. Now, the fact that implieds have not responded to the spike in realize just suggests that the vol market thinks that realized was kind of temporary. We had a load of macro data there. We had a bit of choppiness, but the fact that we're back in the middle of the range doesn't make people want to buy a load of optionality and think that we're going to get suddenly massive moves. So the implied vol is kind of leading realized vol, suggesting that realized vol is going to roll back over again. That's what at least what the market seems to think. Remember, implied vol forward looking, realized vol is backward looking. Okay, and then for me, the calendar trades are kind of the obvious ones. If we look at the term structure, it does seem that it is quite flat, particularly on Ethereum. So you saw not massive moves in term structure this week, but we saw weeklies down a little bit, about two to 4 vol points. We then saw end of May to July up about 2 or 3 vol points, and then the long end was offered. So pretty much mirrored between BTC and Ethereum, not any real massive difference there. But you can see these curves looking quite flat, that Ethereum front end relative to, say, the middle part of the curve there. So I would expect calendars to go bid. I would expect some sort of contango here. But bear in mind, the front end, it is all back to like 60 vol. So it's not like we're trading on a flat curve at 80 vol. That would be an absolute no-brainer to sell the front and buy the middle. But now the kind of whole curve has shifted down. So actually 60 vol is only 3% a day. For crypto assets, it's not a no-brainer that they are going to get hammered at 60 vol. If they do, the chances are the curve will go into contango. And we have seen these front-end vols go as low as sort of the 40-odd. So it's possible if we go sleepy for a couple of weeks. But really, I would say that the part of the curve to own does seem to be July now, that they've kicked the can to July. So you would expect that part of the curve to contain some event risk and hold up better than the shorter maturities like May and June. Bitcoin curve, not quite as flat as Ethereum, but similar story where we would expect it to continue to go into contango. In terms of skew, you can see a cool bid has come back everywhere. Ethereum still is in put premium, though, in the front end because it got into very extreme put premium last week. Bitcoin, on the other hand, has flipped into calls. So we've got about a 2 vol premium, 1 to 2 vols in the front end, and then back end's at about 5. Whereas in the front end of Ethereum, we've got 2 to 3 vols of put premium out to May. And then we are looking at 3 or 4 vols in the extreme back end, basically. So we do still have that call premium in the back, even in Ethereum. It's not quite as extreme as Bitcoin, but telling the same story that, yes, short-term breakdowns are very possible, but long-term bull story is intact. And then in terms of relative value, we are seeing Ethereum vol holding up a bit better. Front end got as high as 10 vols over Bitcoin. Realized vol's been high for a while, right? We were mentioning like why with realized vol so high, we would have thought this spread would continue moving higher. It has done that. 10-day realized is sitting at about 7 or 8. 30-day realized is sitting at about 13. And then we're bang in the middle there on the front end, implied spread at 10. Now, out to sort of 3 months and onwards, we are still sitting at 5 on the vol spread. And actually, we think the real Ethereum story happens a little bit later down the line. So actually, arguably, I'd say Ethereum 90 days are better own at 5. And I'd probably rather sell the front end at 10 because I don't believe Ethereum's going to have a massive move in the next week, right? So that curve seems to have gone a little bit too far, in my opinion. And I would rather own the back end at 5 vols, but I wouldn't be chasing the front end here at 10 vols, basically. In terms of the spot spread, it's still in the doldrums. It hasn't broken down materially from where it was. It is still at quite depressed levels, but it hasn't really accelerated to the downside like we thought maybe it would do last week. on the breakdown in crypto assets in general. It's been relatively stable. And that was despite us breaking below 3,000. It's one of those things. I would love to see it break down to like the next big support in that Ethereum Bitcoin spread to then pile into some RV trades. But it is looking less likely that it's going to, if on a week like last week where crypto sold off, that Ethereum didn't really underperform materially versus Bitcoin. If it's not going to do that, then maybe the tide has turned and maybe people are kind of looking a bit forward on Ethereum and say, okay, yeah, these ETF dates are going to get kicked down the road, and then those later dates are the ones where we're actually going to see a move, and maybe people are starting to position for that, right? So that could well be what's preventing this thing from breaking down. All right, we talked about skew, but just so you can kind of visualize it on the charts here, we got that big spike in Ethereum put skew above 10 vols that has reversed. As you can see, that yellow line's come down, but then Bitcoin's actually gone into positive. So the fact that it's gone below zero here means that it's call premium on Bitcoin. And then you've got that 3 month. 3 month is a kind of neutral-ish on Ethereum, but we've got a healthy put premium. We've got a healthy call premium, in Bitcoin of around 4 vols there. Okay. What I would say generally on skew is these wild gyrations in skew, especially in short end skew, are symptomatic of a market that is still driven by speculation. There's not enough structural hedging demand from sticky institutional capital like we see in TradFi markets, right? TradFi markets, skew's always for puts. It goes up or down, but it's always for puts consistently, right? In crypto markets, the long end has been consistently for calls for some time, which is like the structural bullish kind of backdrop for crypto. But the front end flings around positive, negative all the time, depending on what the last sort of big move was. And that is very much a sign of speculation. Okay, now we do think this will change over time as the ETFs if they bring more real money allocations into the space. That real money will then have systematic structural hedging needs. And that will they'll probably use longer term options rather than weeklies. So you'll probably get a put bid that persists in the kind of anywhere between 3 and sort of 12-month maturities, right? So I would suspect that's where we're going to go. It just might take some time to get there. And for now, anytime crypto does anything on the downside, people just fly into super short dated puts, because when the vol is in the 60, 70 plus region, it's quite costly to buy protection further out. So all you do is you just hedge the immediate tail of, oh, what if this thing pukes another 10 or 20%? And you just buy super short dated options to kind of cover that risk. And you pray that those options are a waste of money and the market recovers. And that's kind of what's been happening, right? So that's how investors are behaving. Not only are we getting speculative moves, people using short dated options for speculation, but you're also getting the people who are hedging their books using options only want to pay as little premium as possible. And so they use the super short dated stuff, right? Because they just want to hedge that near term crash risk. And that's very similar to what I did, actually. I did the same thing last week. I didn't really want to de-risk my whole book and get out of all my positions in terms of my crypto holdings. But I was like, okay, if this level breaks down, I don't know where the hell this thing stops. So let me cover myself with some short dated downside. And that's what I did, right? And now turned out to, well, I'll show you what happened to those puts in a minute. But basically, I was acting very similar to what a lot of the market was doing last week, basically. Okay, so that's skew, and that's the general vol summary. If we look at the dashboard, you can see we're back in the middle of the range. We are still a little bit elevated in vol here, but nowhere near what we were, as you can see from the vols here that have come down in the implied vol chart. And then carry is deeply negative because of those big swings we got last week here. You can see down 5%, down 4%, and then up 6%. So some pretty big swings that are captured there. But, if this week kind of calms down, that realized vol will fall off a cliff again. And that certainly is what the implied vol at 52 is suggesting. Ethereum, pretty similar setup here. Vol slightly more elevated than Bitcoin at 61, but just in its range, slightly more elevated. Carry-wise, not quite as negative carry as Bitcoin, but still pretty negative. We saw that big 6% drop and then a 4% rally. But you can see the rallies were not quite as impressive there as Bitcoin's was. In terms of flows, volumes on Bitcoin were pretty flat, about 8.5 billion. Put buying that we had seen on the breakdown of 60K, those puts were sold back. They were the 51K puts in size, but we also had the 62 and the 60K puts. That was after some were monetized before Powell at the FOMC, and some were monetized after. Now, call buys also came in that kind of 60K to 75K region. That was in May. A lot of it was in short-dated May stuff, but we also did see some September calls as well getting bought there. And they were funded by selling far out of the money stuff. So these big orange bars, this big green bar, that they are sales of 90,000, 100,000 type calls. September is the orange bars, and that green one is May, with those 80,000 calls getting sold as well. Okay. And there was a little bit of July upside buying, 100K strikes as well, but not size-wise, not quite as big as some of these sales we're seeing in those really high out of the money strikes. In terms of ETH flows, that was actually up 40%. Puts that had been bought for protection were not sold as aggressively in Ethereum. Obviously, people more concerned about Ethereum breaking down. Now, the largest clips we saw, you can see these big pink and green bars. These were calendar trades. People playing the 17th of May versus the 28th of May calendar. So a 1-week calendar trying to capture this ETF approval decision or rejection or whatever, and thinking there might be a load of volatility around that decision. Now that they've started punting the dates up into July, I'm not sure that trade is going to do anything for whoever did that trade. So it's a bit of a non-event, I think, that trade. So it starts to be, people are going to start banging on about July as being the bucket to own, probably. That's if the SEC kind of does move other approval dates around that similar sort of time frame, but I don't see why they wouldn't, right? The chances are they're going to all cluster around a similar sort of time frame. Okay, outright calls also getting bought. Obviously, some people thinking that we might get some bullish news. So paying up for May and June 3,900 strikes, very far out of the money, very low premium options, just trying to get some leverage there for a potential rally in ETH sooner rather than later. Okay, gamma positioning wise, dealers look to still be short gamma on Bitcoin. Pretty small short though. We're talking about sort of less than 20 mil. The big short strike seems to be 65K here, and that's on a bunch of different expiries. It does look like as we rally, if we were to get to 70K, the position would get shorter because you're in the vicinity of more short strikes and you move away from the long strike. And the long strike seems to be sitting at 60K here. And there's also one sort of 64K for 10th of May for this week. So if we rallied away from that, you would probably see the gamma get even more negative. But it doesn't look like the position size in Bitcoin, the gamma position at least, is big enough to materially impact the market. Ethereum dealer gamma has gone back into positive. It did briefly dip into negative when we sold off below 3,000. As we recovered, you can definitely see there's a lot of calls, a lot of long positions stacked up here in this entire range from sort of 3,300 to 4,000 on Ethereum. So you would see if Ethereum did continue to rally, you would see that gamma positioning rise, and arguably that should mean it makes it even harder for Ethereum to rally. But to be honest, again, in terms of the context and the size of these gamma positions, I don't think they're big enough to actually stop Ethereum from doing whatever it wants to do, right? So I don't think it's like the S&P where the options market is somewhat swallowing up the rest of the market and being one of the biggest drivers of short-term price action. I just think in the current setup, the gamma positions in crypto vol are not big enough to stop whatever the crypto assets want to do. So yes, we keep an eye on it. Yes, we want to know what's going on, but we're not going to kid ourselves that these gamma positions are so large that they're actually going to determine what the crypto market actually does, right? The things we want to know about, we want to know where the dealers are long or short. That will help us kind of think about what sort of positions to be putting on, but we cannot lean on this number to have such a material impact at the moment, in my opinion, right? And I think the evidence is there from what the market's doing, right? It's just not really distorting things that much. that's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.